By the end of this video, you're going to have a comprehensive view of how to trade the markets from A through Z. Let's get into it. Welcome everyone, and thank you for clicking through, as I am about to tell you a brief story about how these indicators that I'm showing you today actually changed my life. I have been in the markets for 44 years, been all kinds of aspects of the markets, from floor trader to working in hedge funds to managing firms, all aspects of the business. And what I'm going to show you today is the culmination of 44 plus years of managing money and trading. In 1984, I met an associate of mine, and together we started a deep dive in understanding moving averages and other aspects of the markets. One of the things that I'm going to talk to you about today is the 10 core indicators that changed everything, and these were developed over multiple years. So they came in existence as we began to ask some really hard questions. Everybody I know has used moving averages at some point in time, but the realities are, as people just look at the value of the moving average and make assumptions that the market will stay above them, and they make a lot of discretionary decisions that are ultimately very subjective. And what we wanted to do was to take out all the subjectivity that we could and actually start to put probabilities on everything we did. We did not want to be guessing at anything. Our money was too precious. We were trading our own money at this time. I was also a broker, so I also represented other clients. Everything that I did in my business, I did for myself. So I was trading for myself and developing these techniques. So in 1984, we started looking at moving averages and developing what averages seemed to make the most sense. Somewhere around 1985, the concept of Elliott wave was introduced, and we started studying Elliott wave, and we got really intrigued by that. But Elliott wave became so complex, we needed even to simplify more. So all of this work started to come into play, where we were looking at Fibonacci ratios, we're looking at the moving averages, and we started to develop probabilities and indicators that would tell us what the likelihood of a market staying above or below a moving average. This was the key question that we asked, is why is a moving average a trend line and it holds, and why does it fail? And once we started to dig into that, we found a lot of information there that was going to drive my career forward for almost 40 years now. That was 1984. I started in 79. We developed a probability map. We knew when a certain percent change was happening within a moving average that we could count on it having a higher probability of the markets holding that value. We also started to break it down into first and second derivatives, which actually became the first indicator we built, which was the PPM, stood for price pressure momentum. This gave us the necessary numbers and theory to determine when the moving average was going to hold and when it was going to break down, and also develop trending characteristics when moving averages were in different levels. We went into a lot of detail, so I'm going to open up just a bit of that book so you understand a little bit further. There's a reason why there's 3 primary moving averages in everything that I do. We believe that the trend has 3 basic trends within a larger trend. This went along with Elliott wave theory, having 3 waves to the upside. So we started to design the moving averages around the patterns that we knew were accurate and from an Elliott wave standpoint. Then we went into the next level, which looking at the probabilities and what the angle of attack. The angle of attack is an aviation theory, and that was important to understand as well. Because once you had a certain angle of attack, just like with aviation, if you got too steep, the plane would stall. Same thing with the markets. If they got too steep and went into parabolic, then they were likely to stall just like any airplane would. And you need more and more volume, more and more activity to drive those markets higher. And sometimes you would see markets that would exceed almost every possibility that you can imagine. We've seen that. Anybody that's been around the market has seen those things happen. But all we wanted to do was to generate an understanding the trends and where to position trades. And it was all about trading and making money. It wasn't necessarily about trying to call tops or bottoms. It was trying to find the middle section of every trend. So we want to build a base. We wanted to get some kind of ABC or 1, 2, 3 pattern where we had Fibonacci targets, all types of things. So let's talk about the indicators I'm going to show you. I have 10 core indicators. We deliver 19 in this package. There's other uses for some of the ones I won't discuss in this video, but the 10 core are the 4 moving averages, the 10 period simple, 21, 40, and the 200 period moving average. All of those actually help us to identify the trends and everything that's going on. When we're looking at these larger patterns, we started to recognize where the trades existed, and we wanted to catch that middle 40 to 60%. We didn't want to be heroes picking the bottom. We didn't want to pick the top, but we wanted to have a setup that would give us the highest probability that there was a continuation going to happen. And I always say that I try to be on the right side of the market, but the right side. So the lows get established, and then you buy once the low is there, it moves up to the right and you start to go up. That's exactly where you want to buy as that trend starts to flow and you've got solid cash flow. You start to see these probabilities come into play, and you can start to look at Fibonacci targets and other types of things. I am what I call a cluster number trader. I like to see lots of clustering in these patterns before I enter. I developed a Fibonacci projection tool. The first thing we built was a pattern finder. The pattern finder would find the key high lows, and then from those levels we could start to project out different types of patterns. I won't go through the exact numbers, but these are automatically projected whether you're on a 1 minute, 5 minute, daily, weekly, monthly chart. All of these things are going to come into play. So just know that that is already built in. So we need Fibonacci targets. We need to understand momentum and trends. That's the PPMs and the moving averages. In 2022, we added an auto-regression math, and that gave us some machine learning, some forward projecting on what these moving averages and the PPMs are going to do before they did it. So we can project out as many as 150 bars in the future. The real key ones are about 2 or 3 bars in the future. As many as 10 will give you a general flow of what the markets are likely to do, and that's been a game changer, and that's part of this suite that we're offering to you today. So I'm going to go through a couple examples in this next section. I'll go off screen and we'll talk and bring up some charts and look at some patterns that are going to help you. But the final thing that I want to bring in that I think is really key to understand is, out of all of this that I'm going to show you, there are definitely techniques that you're going to need to use to bring these into your trading activity so that you can start to raise the percentage of your winners. And that's the key element. Let's get into some charts and let's look at some specific uses from day trading to swing trading and longer term analysis. In this section of the video, I'm going to set up some daily charts and showing you how to use the Fibonacci targets in conjunction with the PPMs and all 10 core indicators. Let's get into that. So as we look at the gold chart, I've got a script set up so that we can replay this market. As we watch it unfold, we're seeing some targets to the upside and downside starting to set up. The algos here on the WaveTech WTARs, we're seeing sideways movement, but what we're looking at is the projection of the PPMs for a decline. And then after that, we're looking at a potential sharp rise as we come in through this trough. So let's watch this thing set up. So you can see here, 2 more bars. We're into these Fibonacci targets on the downside. We're looking at 2019, 1995 are those numbers. We look up here, we printed 1996, so we went right to that. We went right to the Fibonacci 2 target, and now we're very close. The algos are suggesting that we're 1 or 2 days from a turnaround. And we want to watch for several things here, that the algos are forecasting a turnaround, and then we're going to look for Fibonacci targets to come into play. So let's go ahead and run the script again. So right here, we see this little V bottom on PPM1. We've got another little setback here coming, but what we're watching for is this Fibonacci targets to come in. And then what we're going to do is we're going to buy into the base of this pattern, and I'll draw in what the overall setup is once we've gotten through this. So back this up one more time and we'll go through this setup. But the PPMs are starting to turn up. We've already seen down here PPM2, PPM1 is turning up. Just run the script again. Just got our first Fibonacci look here. We have 3 targets that are over here right now: 2075, 2105, and 2104. You can see all of a sudden the WTRs are accelerating the upside, suggesting we're going to go vertical along this line into these targets. So now we're getting more green dots up here. We saw this little setback here, so we got a red bar. Everything's set. It looks like the next bar we should start to explode to the upside. There we go. We're starting to break out. Another setup, and then we should see an explosion to the upside. There it is. Let's blow that up so we can see that right in through Fibonacci 1, Fibonacci 2, about to be hit. Fib 3 is up here, as I mentioned, at the 2124 level. But this is the interesting part. As I mentioned, we would be buying in on this particular bar. I also have these, you'll see these red and green arrows. Those are the pivot points. This range right in here around 2039 is where we would be buying into this range, expecting the market to move up along this projection. By these dotted lines are the projection or of the moving average to go up, and then we have these fib targets. So from a trading standpoint, we want to buy into that level, and then when I always suggest that you trade in threes, so you'd have 3 contracts, whether they're minis or whatever the size of your contract is. You could also probably do this trade on something like GLD with ETFs. The key level here is to watch what's going to happen. The next bars, in 3 bars, we basically went from 2036 all the way up to a high of 2128. So we almost 100-point run here. And that was targeted, and you can see that the algos are still going forward. Let's look at the PPMs real quick. You can see they are getting up here to peak values, but we're also seeing acceleration in PPM 2 and 3. These suggest there's much more in this trade. Typically, what I would suggest is that you would have orders to sell out on each one of these and ultimately be out of the trade. One of my mentors used to always talk about what you want to do in a trade is you want to be out of the trade long before the top. You want to sell in as you're going, especially as from a trader and you're setting up these trades. All your goal is not figure out where the high is, not to figure out how far it's going to go, but to capture these trades when they come in. So let's go back and take a look at this. As I was just mentioning, the PPMs are suggesting there's much more in this trade. Let's take a look at this. We've got 4 bars vertical here, and here's 5 bars, 6 bars. Finally, we get a bar where there's a climactic, looks like where there's a bit of what I call a flush. And now you see the algos are starting to round off. This is telling us that we're getting close to the top end of this. Now, I don't have the market grid on there right now because I wanted you to see just the pure Fibonacci projections as well as the WTAR, which are the predictive moving averages. A couple things happen. We got a red bar at the top. This is signaling that we have a marked top here. So we're looking at this bar suggesting this is a high. And now look at the algos on the moving averages. They're all telling us things are getting kind of more in a corrective phase, maybe a consolidation of some sort. We come back down and we bring up the PPMs. There's probably an opportunity to go short even up here and to flip this trade. Basically, you could have made these 3 levels and you could have extended it out for a few more days. But look at what's happening. Now we have one of these V tops, and it looks like it's going to cross its first and second derivative, but this is just enough to tell you that this was the trade. Like I said, you could probably flip this trade. Let's go ahead and play this out. You see, we're hovering right along this 10-period moving average. I'll blow that up so you can see it. Let's run it some more. So all of the algos are suggesting that we're getting close to some sort of top. Meanwhile, even though we printed up, we did not get a reaction out of any of the PPMs. PPM stayed solid and suggesting that we're going to top here. But the main thing that I wanted you to see is that there was an opportunity in this base here to get an ABC pattern. I'm going to draw this in so you can see exactly what's going on here. So this was A, then a B wave, and then this was C. This is what was being projected right here. And then what we're looking at, this is where the first top was projected. We got a couple of minor bottoms here, and then the top. But all that really matters is this, is that we got this pattern right here where we saw this little 1, 2. We got the Fibonacci targets coming out, and we're just looking to trade these numbers. And that is one of the most profitable trades. Now, this same trade can be done on a 5-minute chart, a 15-minute chart, a 4-hour chart, Bitcoin, doesn't matter what you're trading. This is a setup. When you see this, there is a nice swing trade. And then the beauty of these things are they're going to identify this in real time. So let's go and let's take a look at some intraday charts and show you how those set up. So we got a blank slate up here. Start with the hourly chart and get these charts set up that will be ready to trade. One of the key elements that I always talk about is the market grid. So we're going to start with market grid. You go to invite only, and we'll put the market grid up. I want you to see this general formation, and there's a couple things that I always talk about, and I want to briefly talk about the concepts behind the market grids. This was developed in actually 1990, and the reason why it was developed, I had some hedging customers when I was running on a commercial desk, and they wanted to know where's the best place to put a buy and sell hedge on. Taking a fair amount of data, it's about 12% of the time we will get an extension. If we come into the settings, this is basically looking back on 3 bars back, trying to develop a range volatility. Now, those of you use Bollinger Bands, those are our standard deviations John's using on that. This is different. This is just looking at the pure high-low range and projecting the range. So here's the theory behind what is going on with these indicators. Is the concept here is that each bar will overlap the next bar by some portion. So when you're trending, there's certain characteristics of bars, and when you're non-trending, and you're in a sideways range, then these ranges will contract and there's expansions. What we were trying to do back in the day was trying to determine where on each given day, where was the best place to buy or sell. If we had to do a buy hedge, where do we put that in? Then if we needed to do some selling, where's the premium value that we would put a hedge on? And when you're hedging, it's a different type of operation. This is about locking in the volatility, get a buy hedge on just to make sure the price doesn't run away from you, and you can come in when the cash is available to be able to do the other security. So out of this, though, this is why I tell you this story. Out of this, what happened was something interesting is all of a sudden we started to look at this from a different viewpoint, that these bars really were interconnected like this, STX and RTX type configuration. So here's what happens. Let me bring up the settings again. So it's set at 3. I think you can go out to 250 or so. I'll show you how that works, and then we'll go through just a little more theory, and then we'll move on. I'm changing this value. You should see the market grid start to change. So now we're seeing a shift and I'm at 50, 60 days. So what it's doing is doing a 60-day look back, looking at the average range for 60 days and calculating what the values would be. And you can play with this indicator and try to find something, especially if you're day trading. I use these for day trading off of the extremes of the day. This is really handy to have this. So this will work right now is on an hourly chart. I'm going to set this back to 3, just so we can normalize. 3 was the basic volatility that we wanted to, from the standpoint of putting these buy and sell hedges on. This was a best value. In the hourly, you can see there's been some points where we've exceeded some of these values, but we didn't close above them. We came close. This last one over here, this is hourly chart. This is S&P futures hourly. This was yesterday's sharp surge at the end of the day. Somebody on, I think, Twitter asked me if the hourly algos picked up this rally, and it did. And I'll show you that when we get into the PPM. So we're going to start with market grid, then we're going to go to PPMs, and then moving averages, and then we'll have pretty much everything set up on the screen. So the basic premise was, and you can see it, bars overlap each other. Typically, if it's in a trend, this is a pretty choppy area, but once you get into a trend, you'll see the bars stack up. You'll see this little area right here. There's 1, 2, 3 bars. They all overlap, and they're almost perfect on previous grid marks. It forecasts for the next bar, and you can see we got right up to the extreme. We came back to the bottom. Here was STX buy signal. So when you get close outside of the bounds of this market grid, it says 1 to 2 days minimum will be in a sideways to up. And you can see here's 3 bars, almost 4 bars up. The next time that we had, here's another STX buy signal. So we closed below the extreme this day. And look at this. The same bar formation happened again. Part of the art of being involved in these markets is to wait certain things to come into play. So you can see right here was a nice sequence off of that STX. And here's yet another one right here. So we got STX buy 1 hour bar, and then we get this big expansion. This is right here is yesterday's late session rally, right here. So this is just from the perspective of what's going on with the market grid. Look for these patterns. You could do pretty well. What I'm going to tie together here in a minute is we're going to add other elements into the process. We're going to add the PPM. So I'll go through the same scenario. And so let's start to build this out. So I have the hourly chart here, PPM 1, 2, PPM 3, and then we'll put the 200 up here. So now we have additional information, and we could build these out separately. In fact, I am going to isolate this just for a second here. So we got PPM 1. Let's look at this just as a trading tool off the hourly chart. And then we'll be able to fine tune this with using some of the other ones. We're going to tie something together, replay this hourly chart. What we're looking for is one of these patterns where we get a V bottom. This is for trading off an hourly chart. You start to see this turn down. There's a little V potential top coming here, and this was Wednesday at 10 a.m. These are all Pacific time, so they're set to my local time. That it looks like the market was going to turn down. So let's run this just for a couple more bars. So we already had indication that we're about to turn down here. Right on this bar here. There it is. So we get a big reversal bar, and things are still looking like it's positive here, so we want to run it. What we're looking for is that crossover and V, so we just followed through here. The next thing we're going to look for is a V bottom, and you can see the calculations. These are predictive. This is what is being predicted to happen. Predictions are suggesting that we're going to see some downtrend here. We did indeed get a bit of a downtrend, and then we got a little uptick here. And I play these sometimes because you want to time them. TradingView will actually tell you when the end of the sequence is going to end. If I'm seeing a forecast up, I'm probably buying that forecast up, just for a scalp trade, sometimes you'll get anywhere from 4 to 10 handles out of this trade. And it's very quick. But the good news is, 10 minutes, 15 ahead of time, you're watching that click for the clock. So you're already setting your hand on the trigger, so to speak. Here's the next setup. Let me draw this in so we can walk through this. The algorithms are going to turn back down. So as the hours come in, we're looking to pull the trigger maybe on a short trade, and then you can see this is 3 hours in the future being projected where my cursor is, if you can see it right now. Right in that area is somewhere in that final hour of trade is where we're looking for a potential turn back up. Looks like we get a short. We got the downtick, but look at this. We got this big reversal. There it is. What was happening, turn up here on this bar, and then this was the last hour of yesterday. So we got the blast, but we got one other thing that happened. We got the RTX sell signal right at that level. And let's just play this out because this will get us to real time. There's a sell signal, and we're getting sideways bars. There's something else. I talk to you folks about this stuff all the time. See this big bubble that formed here? It's similar, but different than what happens on like a Bollinger Band. So we get that big bar expanded volatility. So range volatility expanded. You don't get another move until that range volatility typically will contract back to some normal range. In this case, after the big spike, we just went sideways. I think the reason why it went sideways is it was after hours. There was no activity and volatility stopped. We got this sell signal trying to come in here. Is one of the best times to trade is about an hour before the U.S. Open and the hour after. You should be able to make your entire stake for the day in that range. Any market that's trading 24 hours for the most part, like the E-minis, like the futures, these same techniques will apply to any of those. Just for the record, I put these indicators out at one-time cost just so you folks can have them as long as TradingView's around. These setups happen on all of the markets. It doesn't matter. It can be stock if you're a Tesla trader or whatever. You're going to see all these setups. And we're still working with an hourly chart. So you can do this with any time sequence. You can have a daily, weekly, monthly, 5 minute, 1 minute. We could change this all over. All of these characteristics, all these things happen the same way. You can apply all these theories. The way that the PPMs work, they're all tied to a moving average. A couple things you can do. After we get the PPMs up, we're going to put the Fibonacci target up there, as well as the WTARs, which are the predictive SMAs. And they're utilizing the math that's in the PPMs to predict where the moving average is going. 10-period moving average is really good if we get these big V setups. This was a perfect setup we caught the other day with this rebound after this big down. The algos were suggesting a sharp V turnaround. I call this the V trade, where you get this, and it works best on the downside, but it can also work on the upside as well. What we're looking at here is RTX sell signal, but we also had this V top that suggested that the market would fade off. So we got a signal that says this RTX sell says we go sideways 1 to 2 bars, could be more. But all of these little V's that started to set up around here were telling us on these indicators here that we were at least going to go sideways, and there was a potential for the market to break down out of this pattern. And the reality is it didn't. Look how it stayed perfectly within the market grid. Even in the quiet hours, it just traded within that range. In theory, I would argue that you could use a lot of these indicators freestanding to set up, especially if you're intraday day trader, just looking at ranges. So you're basically buying the extreme ranges, but you get the confirmation if you have these V where you get the V bottoms. It was being forecasted to turn up. This is the actual, but if we went back, it was being forecasted. We got this rally, and then you see the V tops where everything was being forecasted to come down. This is the actual, the solid lines are the actual. I want to talk to you a little bit of what the PPMs are doing. So the PPMs, what happened way back in 1984. This is what the concept is that I'm talking about here. This is the probability map that we built back in the 80s. As the PPMs are designed to figure out what the probabilities of the market remaining above or below, depending on the trend of the PPM. So what happens is if there's a certain value, you can now trade against those moving averages with a higher level of confidence. The accuracy in understanding this concept is really huge. This terminal value, that's typically what a PPM will do. So if I come over here, the value is around 0.50. And when you get to that level, that ends up to be the extreme. And then you see the green line starts to fade. The ppm is the first and second derivative be penetrated. That is the first sign that this is the momentum's going to roll over. And now you can start to understand that there may be a possible short at those levels, or there's at least going to be retracement back toward the moving average. And as long as it stays over certain levels, then you can look at these probabilities. If we come over here at 0.25, if you're still at 0.25, even though it's declining, it still has this same probability that the market will hold above this level. Once you understand that, you know you can trade. The market's pulling back into the moving average. You got a 0.25, which is trend level. You can buy off of that, knowing that 7 times out of 10, think about this number, 7 times out of 10, the market will bounce. Does that mean it's going to go into some vertical mode? No, but it does tell you that you have the opportunity to play off of that. You have to have this multi-series lengths of charts, daily, weekly, monthly, and quarterly charts, same process. These are important concepts that I'm showing you here. This red line, whenever it crosses this 0.125 level, this typically tells you, when I see it start to exceed 1.25, 0.25 is the trend, but 1.25 suggests that there will be an extension. So if you're doing Elliott, let's say it's a third wave, and we're getting above those levels, chances are it's going to go into some kind of extended move, meaning that instead of going to just 1.382, the length of the previous pattern, maybe it's going to go to 1.5, 1.68, maybe even go in. What you'll see here is this orange line going up here is the parabolic curve. This is the scale over here on the far right. But this general setup here is what all the PPMs are about. Understand that these concepts are very, very solid. We developed this whole probability map, everything back in the 80s, back in 84. I did it with an associate, and we put a lot of work into this. We built those first custom indicators because we wanted to look at the internal breakdown of a moving average, not just look at a moving average, not just looking at some momentum in RSI or something like that. A lot of people use it. I don't ever look at it as RSI. Haven't looked at stochastics for 40 years. What we were looking at is the internals of the markets, the patterns that we're setting up. Were we in, what sequence did we believe we're in? And we set up some rules on that as well. This whole angle of attack theory is the basis of understanding trends. And like I said, you could look at hourly trends, see if there's a daily numbers, how to take multi-series charts, meaning whether it's hourly, daily, weekly, monthly, and how to combine and do the analysis to come up with a solid analysis. Most people, I would say, make mistakes around trends. Trend lines are way too subjective. I want the markets to draw the lines. I want to understand the dynamics of moving averages. I always joke that I have a PhD in understanding moving averages. 40 years since 1984 when we did the PPMs. And we have one more thing to put up here. Let's go back to the chart. Let's go up to indicators now, and let's put the fib projections on. We are right now 9 minutes and 46 seconds away from this update. It looks like it wants to turn up. We also have Fibonacci targets up here at 53.38. Let's talk about the Fibonacci theory. One of the first things we built way back in 1992 was a pattern recognition tool to mark all the key lows and highs. What you'll see is these blue lines that are coming here. These are, if you've ever used a zigzag tool, this is way better. So we're marking all the highs and lows, but once we've marked these highs and lows, that we have this Fibonacci tool. So once we know, I'll draw in a couple patterns here. You can see this pattern right here. This is where these numbers are coming from. And I'll even tell you what the calcs are. The calcs are that the length of this is length of 1, measured from the bottom of 2, will be equal in length. This is equal 1.382 times this length over here, and then 1.618 times that length. So just a Fibonacci projection sequence off of a pattern. The nice thing about it is you and I don't have to sit here and monitor. It's just going to show up. Look for these patterns all the time. So I've got level 2. This is TradeStation, watching level 2. In theory, what we're looking at here in 1.2 minutes is a potential for this to move higher. I'm going to expand this. So we've got a bit of a reversal bar going in the last hour. And that was from this little turn up. Last hour, we got the forecast to turn up. We got a higher bar. It'll be interesting if we can get the update, if we can get through this green line. Another thing I'm going to watch for is the market grid going to turn up. If we get a upward slope, we're likely to get this last hour to be a rally. We're 3 handles off pushing them right into this hourly close. Very interesting. There was the update right there. We broke through it. 5-minute chart. If I would have had all my charts up, the 5-minute was already forecasting this turnaround. Now look at this, we're at 18.22, by the way, is an all-time high. So we are four handles from going into a new high. And I want to show you one other thing, is the 5-second. We just got Fibonacci targets to the upside, 2022 and 23, which would be an all-time new high here. The algos are starting to weaken just a little bit. We're getting some downward. So we got some new fib targets coming in here. Now I want you to look at the bottom indicator. It's turning south on us. We still have these fib targets up here. We want to watch this indicator fairly close, but this is the 200. And so this moving average, orange moving average down here, is a 200 period moving average on a 5-second chart. It calculates to 16.66 minutes. Interesting. But this is a great trend to trade off of, and pretty good indications. What we'd want to see ultimately is a pullback into here, which is back to 12 or so, and just go to a 5-minute. So we're seeing a couple things here.
Order filled.
So I just went short here. So we got a little bit of a profit down at the, so look at this. We already got 1050 in this trade.
Order filled.
I just took that out. So what was happening, I saw this thing coming. This is back to that 12. Look, here's the 200 I was just telling you. I knew this was going to come back in here. This is the other element. I love this 5-second chart, and I've seen a lot of comments, folks that are on the Discord talking about this. But when you start to see the WTR's 10/21/40 forecasting below the 10, that is probably it. I am
order filled.
I'm actually coming in for a long scalp here. I may be premature. Let's just see if we can get. I'm not looking for much here. I got 10 contracts on. Let's go back to this other chart here. So we're trading right along this 200. Looks like we're probably get a little bounce. We've got a little resistance, but we should be able to get back to about the 15 handle, which would get me out of this trade. We're getting little Fibonacci targets coming in. If you look at this, don't need much, just a little pump here, starting to push up in toward this. We should get back to this 40 period moving average. So I'll be hopefully at 1450 is where I'm offered at the moment. Let's go back to that 5-second chart and see what's setting up here. Trying to get back up here to really 1375 is resistance now. We got fib targets up to 13.25, which is pretty much where we're almost trading now. Back in the green here, just hit that 200. I've got them in here back at 1450, trying to get out. One more tick.
Order filled.
There we go. So we ended up getting out of it profitable. Let's go back and look at that 15 seconds. So yeah, we got back above that 200. One of the things why I didn't panic and get out of this trade when it printed down over here, look at the upslope. You can see that the PPM 200 is turning up. This right here, you can see the upward slope in the indicator. But if you look at this orange line, you can see its gradual upslope. It acts as a magnet. When you get expanding PPM, you're going to get back above this. You can see we just marked a high here. And look at the projections on right here. we've got basically a trend going. Probably go up and make the new high now. But look at what's happening. The algos are suggesting we're going to come back. We got downward Fibonacci targets. This little green line right here, if you can see it, that's a pivot point. It's coming across here. So you can see the 200 is starting to project down. We're trading just below this. There's a little bit of what I call an echo bounce coming here after this decline. This is an echo, and we should get, oh, look at this. We just got some live Fibonacci targets on the upside. 19, 20, and 21 again. So let's make it interesting. And
Order filled.
let's just get long on a 5 lot here just to make it a little more entertaining. We just got, you can see over here, this is TradeStation, but same market grid. We just got an update for the grid is projecting up towards a high. Saying on the 5-minute here, we're getting an explosion. So let's come over here. So this is interesting. When we got that rally, see, that was the sell signal. Look, if we had this up, we got the RTX sell signal. We got 2 bars sideways to down from that value. Now we're coming up, and you can see we've got expanding fib target. So there's probably, I'm going to try to hang with this. I just have 5 on, but this is probably at least a test of the new high. We'll see if we get some kind of flush on the upside here. A lot of times we'll, especially trading here, we got 45 minutes to go in the end of the quarter. Got a decent upslope here in a 5-minute. Let's put all of the algos back on this chart at the moment. We'll probably take a little risk. We're up just in these last 3 trades like $1,500. But what we'll look at is this upward slope here on the moving average. And we've got this, I've told you before, this is a volatility bubble. We have to squeeze this down before we can get the next move. So we're looking at maybe 10 minutes or so to try to get a squeeze on this. I've got a 5 lot on. We'll see if we can hold through this. I don't use stops at all. I've spent a lot of time in trading pits, and I would argue that we never knew where stops were. We guessed like everyone else. Here we are, we're printing up toward this almost 18 handle, and we're getting close. We're still 3.5 minutes away from this update on this 5-minute. I think there's going to be, I would call it a way better than even 60% chance that we get above this 18 handle. But if we look at a couple things, the market grid, the way it's trading here is what I would call be normal from the standpoint of just watching order flow. 224 from the update. It looks like the PPM2 is trying to peak out, but PPM3 is still up. It's going to be interesting to see what kind of movement we get out of this next update. So similar type strategy, when I was talking to you about the hourly chart, you get the same type of pattern set up on all of these, whether you're watching a 1 minute or a 5 minute or 15, whatever you're going to get all these opportunities. Let's go up here at around 2150. I just put a 5 lot in there. If they do a flush, I'm going to have an order sitting there waiting to get out. Here we are trading 18s again. You can almost feel the tension building, right? The setup on TradeStation, I've been a TradeStation user since 1992. In fact, I was the very first company to ever offer products to add into TradeStation in 1992 with a thing called Market Mind. And that's where the indicators were originally launched. Let's see what's setting up here. This is the key element, this bottom indicator. This 200 is about to turn up, which tells us this trend is trying to accelerate to the upside. Very light trade here. Okay, we just got like the 5 seconds starting to turn up a little bit here. You can see PPM1, PPM2, everything's trying to accelerate. And I do believe when we print through the 18 handle, they'll probably fill that 21.25, 2150. We'll probably get that fill. What we're seeing here is this kind of tension building up. I'm going to go back to a 5-minute chart. We just got the update just a second ago. So I have 3 bars up. Still have the algos are suggesting we're staying positive here. And upper end is 20 is the top end of the market grid right now in the 5-minute. And we're still trading 17 to 18. We're just randomly trading in there. Quarter 50s trading right now. Sometimes you sit around and wait for a squeeze, and all you get is disappointed. We are getting some downward Fibonacci targets coming in here on the 5-minute on this last update. So if we don't get through this fairly quick, then we're probably going to go back to that 12 handle. A little bit of a battle coming in here. Let's go back to the 5-second. Let's just see if we're getting anything there. Yeah, 5-second didn't get much out of this upward slope here. The 200 is at 16 now, so this trade is starting to fade, and we're back to the 200 here. I'll go suggest a little stability here. Fibonacci targets up here again at 1750 might be the run here. 5-second chart. I'm going over to the 5-minute. So according to this, we've got another 5 minutes coming in here. We got a break here, or I'm just going to take this, probably reverse this trade if it fades here. Still have this target up here looking for some kind of what I call a flush on the upside, where just they hit the highs and run them. So we're still back at one more shot here. Here we are, 18. This is best quarters, 18 quarters, 50s. Here we are, 75s at the high. 19's new highs, 19 and a quarter. I've got the order up at 21.25. So we're trading the RTX on the 5-minute. If you look at the graph here, we're right there. We're 3 minutes and 17 from getting through there. So I'm just hoping for a little punch through the upper end here. So 50s trading. There's a big offer at 21 even for 245. I might have missed it. I just lowered it to 2075. Yeah, I've got an order to sell these out right at the high of the day. It's probably premature, but I'm just looking to get out of this trade. All right.
Order filled.
I just took out the trade. Successful trading, made 22.37, I think, on 4 trades. No losers. Love it. Those are the best sequences. Let's just kind of discuss what we went through. We used a combination of 5-second, 5-minute, and hourly chart. Hourly chart did give us a slight signal for higher prices into the final hour. We did make a new high on the session. All of those V bottoms on PPM 1, and if you get confirmation, sometimes you'll see a V bottom simultaneously, and it's best when it's being forecasted, meaning that the dotted lines, you have the algos running, coefficient should be 150. This is what it comes defaulted like this. Future bars 50, so I'm projecting out 50 on the indicators and on the WTAR bars in increments. Here's what we accomplished today. We were able to go through a series of the indicators that I use. There's 10 primary indicators that I use. Will help you to define trade locations. And we were able to pull off a couple real-time trades there and be profitable. I think I made 22.37 on the day. I think it was 4 trades. On an intraday basis, there's a lot of analysis that is constantly being updated, especially if you're running 5-second, 5-minute charts and an hourly. I use hourly as the macro trend for the day, if there's such a thing. That's that hour. If I can figure out that next hour is going to be positive or negative, then I go to my 5-minute chart and maybe even using the 5-second for trade location. You can set up some really good trades off of that, and you just have to be patient and wait for these setups. And you can use these on any market that you trade. The bottom line is what we're looking at is getting setups, following trends. If you're a day trader, you're not looking to catch the whole range of the day. You're looking to catch pieces of the day that are identifiable. And if you do that, if you set up and you get these and write these down, I tell everybody you should be journaling around the market. So when you're doing these trades, you should go back after a trade or after a day and go back to your trades and journal why you did those, successful, not successful, did you violate anything, all those kind of things. That's how you get to be better. The old story, practice makes perfect. Make a small bet so you're putting trades in and that you're authenticating your ideas in the markets. You can do sim, but it's going to be better. Put some scratch in the game, put a little money in there. You're going to have much better opportunity. If you don't have these indicators, they're going to pay for themselves very quickly. If you just use some of the techniques I showed you today, you'll be in good shape.